In this lesson, we're going to talk about journaling and backtesting. I'm going to mention why journaling is extremely important for your actual success as a trader and why backtesting can give you much more exposure to the market. So with that said, I want to give you a little bit of a heads up. The lesson that follows journaling and backtesting, that follows this introduction, is a lesson from MasterClass 1.0. The reason being is I am waiting for some really cool journaling and backtesting software to be developed, and I'm going to record a fresh whole series with multiple lessons once that software is finished, which is going to be Q1 of 2020. So be patient. So one important characteristic of a trader is to be patient, and in the first quarter of 2020 there's going to be a whole new series on journaling and backtesting, a whole new season with multiple lessons, beautifully separated and categorized and so on. And it's going to be epic, and I cannot wait to release that for you. But again, just waiting on this really cool software to be concluded and finished, and that's going to be early 2020. And at that point, like I said, I'm going to record a brand new whole series of multiple lessons. But for now, from MasterClass 1.0, this lesson was actually everybody's favorite. It's a really good lesson. It's about an hour long, and it covers everything that you require. So with that said, journaling, let me talk a little bit about that as a brief introduction. Journaling is extremely important to your success as a trader. The reason being is you need to collect data. And when you have data, you can identify where you went wrong, where you can improve, and how you can improve, right? So it's extremely important to collect as much data as you can. I find that sometimes traders are very hesitant to collecting data. The reason being is a lot of times they're not doing too well, and they don't want to see their performance in front of them in a spreadsheet. So they don't journal at all. And that's a big mistake. You need to journal specifically when you're not doing too well, right? Specifically when you need improvement. The beginning stages of your career as a trader are the most important, and you need to journal everything that you do. So you're going to see that we're going to use a spreadsheet. You're going to build yourself a spreadsheet, and you're going to collect the basic data from the entry price to the currency to the strategy to whether it's a long position or short position, stop loss placement, target placement, where the entry was opened, where the trade was closed, and so on. And you're going to collect as much data as you can in a spreadsheet, right? That will have everything that you require. But on top of that, within journaling, it's also extremely important to have a screenshot of the position, categorized somewhere within a note-taking journal, whether it's notes on the Apple computer with the Apple software notes, or whether it's Bear, like I show you in the lessons, whether it's Evernote, whether it's OneNote. You know, there's many journaling kind of note-taking software out there. Find one that you really like. I currently use Notes app on the Mac, right? But previously I used Bear, as you can see in the lesson. Prior to that, I used Evernote. I just like to simplify things, so I deleted all those other softwares, and currently I use Notes. But Bear was really cool, and you might like that, or some of you guys might like Evernote. So journaling, you're gonna do two things. You're gonna have the actual spreadsheet with all the raw data, and you're gonna have a note kind of app where you're gonna take the screenshots of the position as it was taken, but most importantly after the fact, when it was actually closed, from the lower time frames and preferably also the higher time frames, so you can see the whole picture. The benefit of that is when you go to review your performance, right, you can look at the spreadsheet and you can say, oh shit, you know, I went in the month of August, I had 5 losses. Why? So then you go to your note app, you go to the month of August, because it will be nicely categorized, and you will see how I do that in the actual lesson. And then you will look at all the different trades that you have taken. You will have the screenshots. Instead of going back to TradingView or going back to eSignal, jumping back on the charts, looking at the intraday charts, and at that point you probably don't even have your analysis anymore. It's just much more time consuming. So I highly recommend that as soon as the trade closes, you take a screenshot of the higher time frames, the lower time frames of the position, you put it into a note app, you make some notes, a little paragraph of your analysis, maybe some notes on your emotional state, and you categorize it into a monthly folder within that specific year, period. So you have a spreadsheet and you have a really nicely categorized note app with all the screenshots. And at that point, whenever you need to review your performance on a monthly basis, on a quarterly basis, on an annual basis, you should literally review your performance every single month, every single quarter, and every single year to see if there are any flaws within your trading. So you would go back through all the screenshots, through all the trades that you have taken, and see where you can improve. Extremely important. So that's journaling. Now, backtesting is also really cool, specifically when you're a beginner, okay, and you need more exposure to the strategies and so on. At that point, you might want to backtest, which is going to be the same process. You're going to journal your backtesting, but you're going to jump back in time to, let's say, 2016 or 2015 or 2012 or 2008 or 2004. And you're going to go through the charts and actually find positions, find trades, and then journal those trades, take screenshots, and you're going to create another journal of your backtesting results. And that's just for exposure. You're backtesting for exposure, to gain exposure to the market, to gain exposure to the analysis, to gain exposure to the strategies. And you're going to see exactly how I do that within the lessons. So that's important specifically for backtesting, is important specifically for a beginner to gain more exposure. Now, there's a second aspect of backtesting, which is backtesting for improvement. Okay, sometimes you're going to notice that there's a flaw within your trading, specifically when you're reviewing your journal at the end of a month, at the end of a quarter, at the end of a year, and all of a sudden you notice a potential pattern within your trading, a potential flaw, potential lesson. You don't want to make a rule right at that point that, okay, because of this, I'm not going to do that anymore. You might want to backtest for performance. So you would go back through all the trades that you have taken and you would collect data. What would happen if you've actually applied that specific rule that eliminates that actual mistake that you have been making, right? And then you would run the data, collect the data, and figure out, okay, does it actually make sense for me to apply this rule, or should I stick to the trading that I'm doing, right? Everything should be data-based. Every single decision that you're making should be data-based. All the strategies within MasterClass, they're all data-based. I've traded them all for years and I've backtested them all for years. And guess what? All of you will also backtest all those strategies for years, and you will see how well they work throughout hundreds of students and myself, literally years and years and years of backtesting data. So everything that I do, everything within MasterClass has been backtested literally for over 10 years, much more than a 10-year period. So that is the intro to journaling and backtesting. And like I said, in the next part of this lesson, you're gonna have the lesson from MasterClass 1.0, and yeah, enjoy it. All right, guys, so now that we're doing the screen share, I'm gonna show you exactly how I do my journaling, but also how I do my backtesting. Okay, so in the introduction, I told you that I'm going to show you how to journal for performance. So this is exactly it. You got to collect all the data, and then you also got to backtest. So what we're going to do here is, first I'm going to just show you the two-step journaling process that I have. And the first step is collecting the data on a spreadsheet. So you see here that I have a spreadsheet with 2015 journal, 2016 journal, 2017, 2018, that I get the performance. Then here I just create a tab for backtesting journal, and I'll show you how to use this in a second as well. Backtesting performance, then IBO backtesting, ABO backtesting, how to backtest a specific strategy, right? So we're going to dig into all of this. But basic data. So let me show you kind of the basic data to collect. This is pretty much the data that you need. You might want to get a little bit more specific, so include a few more things if you want. I'm not including things such as position sizing in here, or commissions and fees and stuff like that. You can, but personally, all that kind of stuff, this is just for my performance. All that kind of stuff, I can just print a report from my brokerage and have all that information there, which is validated within the broker, right? This is just something that I collect the data, I put all my trades in this journal so that I have an easy way of fine-tuning and backtesting and just reviewing my positions, right? So this is the first step. The first step is collecting all the trade data. And I have here such a symbol, obviously, direction, long or short, strategy, open date, close date, open price, right? Close price, stop, limit, and so on. Okay, and we can continue with that. And same kind of thing here. So when you continue to move on, you can kind of see that my journals stay the same, right? And this is something, I started this journal, just so you guys know, I started the journal back in 2015 when I started officially mentoring, officially teaching with my first program, Life Trader, right? So I started that back in August of 2015. And I just kind of started this journal at 10,000, right? So my account was larger than that, much larger than that when I started mentoring. But just for the sake of the journal, I put this at 10,000 and I started tracking all my trades. And since then, you can kind of see that I made 62%, 2015, then 2016, 155, 2017, 138, right? And look how fast that account value grows. That's compounding interest for you. We started at 10,000, 2017, we finished with 331, right? In 2018, already 443. So, right, that's great. And that's exactly what it's how it's supposed to be. Some years are going to be bigger, some years are going to be smaller, but don't think that every single year is going to be exactly 100%, 150%. There's going to be bigger years, there's going to be smaller years. Just remember that. But again, this is the first step of the journaling process. Collect the data. The second step is collect the screenshots, right? So this is what I have here. I use a program called Bear. It's very similar to Evernote, right? You can use Evernote or any other journaling software that you like. I just like Bear just because of its interface, and it's pretty clean and not clunky like Evernote. But with that said, this is mainly just for collecting my notes and my screenshots. So if I ever want to review a position, let's say from 2017, and I want to see my biggest trade from 2017, right? How do I find that? If you don't have the data, then it's going to be very hard. But I could just sort, go to the bottom. My biggest trade from 2017 was pound cut long, advanced breakout, closed on November 2nd for 8.4%. Okay, how fast am I going to be able to find that now? Well, I simply just go to 2017, November, find my trades, and here it is. Boom. Simple, quick, right? And there's the position. So that's the beauty of it. This two-step journaling process, that's why it's so important, because you can, if you ever need to review something, if you ever need to find it, you have it here. And you can see that I keep this part of the journal kind of categorized by year and month, so I got 2015, 2016, 2017 month, every single month, right? And continued with every single month. And the kind of data that you can collect here, mainly I'm just looking for the trades, right? I'm just collecting all the trade data. Then you can also collect your watch lists and stuff like that in there as well. But the main thing that I need is the trade data. So every single screenshot and a little description, if there needs to be a description. But that's the most important thing, so that if I want to find something, I can quickly just find the year, find the month, and boom, I have my trade. Okay, so that's the journaling process. That's it. It's that simple. Now I'm going to move on to backtesting. Right, when it comes to backtesting, you can kind of see here that there's few different ways to backtest, right? Maybe screenshot this, take a note of what you have, what I have here, specifically the categories, the column headings. And this is going to come in useful, and I'll explain exactly how I use this. Then backtesting performance, you have the same thing for your actual journal performance, so you can collect the monthly profit return, dollar figures, percentage, and then the stats for the actual strategy, so I have the same thing for the journal performance. And again, you can kind of keep track of this monthly, such as how good is the IBO doing in 2015, 2016, 2017, 2018. So win, loss, total percent of return, strike rate, and you just collect that data, and you keep that data just keeps on running and running and running with every single trade, right? So that way you know which strategy is performing well, which strategy is not performing, and if something needs to be fine-tuned and adjusted, guess what? You have all the trades here, right? So if you want to fine-tune something, everything is here. You have all the data that you require. Okay, so that's the beauty of this. Now, backtesting, I'll show you how to backtest everything, from your analysis to kind of the strategies. But there's also backtesting for fine-tuning, for improvement, right? So let me dig into that first, which is these two categories here. I have many more of this, but I don't have it in this journal actually. But what this is pretty much, sometimes my strategies are already created, so I have the IBO, I have the CBO, I have the ABO, right? So they're already created, they're already fine-tuned. But once in a while, something comes up that makes me think that it could get better. There could be an improvement. So earlier in 2017, and kind of like at the beginning of 2018, I've decided to categorize, actually, no, this was in 2017. I decided to categorize the IBO a little bit, right? So end of 2017, beginning of 2018. And what this was is I realized that the 4-hour time frame was giving me some clues, right? So one IBOA, and you guys already know this, has a trend change on a 4-hour chart. It has some kind of bullish or bearish price action in your favor. IBOB is developing that price action. IBOC, it has the 4-hour 50 EMA rejection before the entry, right? So I've noticed that was my thesis, and I wanted to figure out if it's actually, what's the difference between all of them, right? So then I just selected all the IBO setups from every single year, right? Sorted them, and then pasted them all in here, right? And I have every single IBO I have ever taken since 2015, because that's when I started truly journaling and keeping all the screenshots, right? So I collected all the data, put it into one, and then I went one by one, so I started with collecting the data for all the IBOs, right? And simply went screenshot by screenshot, trade by trade, and then categorizing them into IBOA, IBOB, IBOC, right? So just found the trade, found the date, went to my journal, found it within my journal, and did the 4-hour time frame have confirmation or did it not? Was it an A, B, or C? Then I went back and put it in ABOA or ABOB or ABOC, okay? And I continued doing that with every single position, and then I categorized it like this, and now I know, okay, IBOA has a 69% strike rate, IBOB has a 63% strike rate, IBOC has a 57% strike rate. This is my return, 15%, 38%, 32%, right? So I know that the IBOC is still good, it still has a decent strike rate, right? But not as good as IBOA and B, and the return is half of the IBOA and B, right? So at least I know the data now. And I did the same thing for ABO backtesting earlier in 2018, when I've noticed that I had a series of losses that were ABOs in 1 month. So I started questioning that a little bit and seeing if there's anything that I can improve. And I've noticed when I was looking at my screenshots at the end of the month that there was a series of trades that were taken at low volume. And I've never looked at that before, So then I'm like, okay, what's the difference between a high volume and low volume? Because I don't want to change anything within my trading unless I have the data. Always remember that. Don't change anything until you have the proper data, right? The data will give you the reason to change or not to change, right? Your trading plan. So here I went again, screenshot by screenshot. I collected all the ABOs from 2015, 2016, 2017, 2018, right? Collected all of them, pasted them into one spreadsheet, and then I went trade by trade, literally trade by trade, looking at the screenshots and going back and marking whether it was high volume or low volume. So simply looking at a chart, looking at the volume time frame, and was this taken at high volume or was it taken at low volume? And then I categorized the data, and now I know, well, high volume ABOs have a 71% strike rate compared to a 50% strike rate with low volume ABOs. Total return, almost 60% versus almost 15%. Big difference. Same amount of trades though. We got 30 trades and we have 31 trades over here. So massive difference in return, same amount of trades. So now I know, okay, low volume ABOs, they're still good because of the reward risk ratio, a minimum of 2 to 1. So I'm still making 15%. 30 trades, 15% win. 15% profit with a 50% strike rate. But the high volume ABOs are much better, right? With a 60% strike rate. But that doesn't mean I shouldn't be taking the low volume ones, right? As long as they're good. So that's the beauty of it. That's the beauty of collecting all the data, because if something comes into your mind where you think you can improve something, right away, you can just collect the data, look at the screenshots, and collect all the required data and put it into a little chart, and now you know, right? I did recently, earlier in 2018, and kind of maybe it was end of 2017, I did something very similar with IBOs, but it was in regards to stop placement. So you guys already know that with IBOs, I put my stop below 0.75 fib, whereas with CBOs, I do 0.618 fib, right? So typically prior to 2018, and I was doing my stop loss below 0.618, right? And then all of a sudden I've noticed that, and the thing is, it could happen after a year, it could happen after 2 years of trading the strategy, but you might notice that something could be done better. And I've noticed that I had a series of losses where I was just stopped out, price turned around and went in my favor, right? So then I collected all the data and looked at the screenshots and figured out how many times was my stop loss hit at 0.618, and then it continued, okay? And then I realized that, by moving my stop loss down to 0.75 on the IBO, it will be a little bit better for me. It gives me a little bit better strike rate and a better return. So that's why now with IBOs, I do my stop loss below 0.75, right? So, and to do this is only a few hours, literally. The most time consuming part is just looking back and forth on the screenshots. So that's kind of it for that. Just so you guys know the importance of collecting proper data with every single trade, because once you have it, once you have the data, and once you have the screenshots, you can do whatever you want with it. You can literally backtest anything that you think needs to be backtested, if you have the screenshot. Otherwise, you just have to, if you don't collect the screenshots, if you don't collect the proper data, then you're always going to have to be jumping back on the charts and trying to find it and go back on the chart, drawing the trade and everything, and then figure it out. So this saves you probably about 5 minutes per trade, if you have everything categorized and you have all the screenshots. So it's very helpful. All right, now we're going to dive into the other side of backtesting. So you've seen the first side of backtesting, which is kind of like already fine-tuning the strategy based on a potential idea. Remember, an idea needs proof, it needs facts, and you need to know that by making this change, it will make your trading plan better, right? So that's why you need to collect all the data. You cannot just think, okay, maybe if I move my stop down to 0.75, I will have a better return. No, collect the data and figure out if you will actually have a better return, right? And you do that by doing this kind of process, just collecting the data. That's it. It's just pretty much, that's all it is, But with that said, backtesting. How do you backtest? So like a proper backtest for improvement. This was kind of for fine tuning, backtesting for fine tuning the strategy, but just for overall improvement. This is something that you're going to do, right? And it's called daily direction predictions. It's a multi-step process, and it's something that requires you to commit at least a month, okay? One pair, 1 year per day. So let me explain that. What we're going to do here is I'm just going to pick a random pair. Let's just do pound CAD, right? And I'm going to do a year 2017. So check this out. So I'm just going to jump back, and pretty much every single software has this ability now to just kind of jump back in time. So I'm going to jump back to the first day of 2017. Here we go. First trading day of 2017. And what I'm going to do now is I'm pretty much just going to go day by day and make predictions, whether we're going to have a bullish move or a bearish move. And I'm not doing this for every single day. I'm going to be simply moving until I notice there's a setup, so draw my analysis as I go. So here's a double bottom potentially, right? But you can kind of see it's still kind of a little bit higher, it's still decelerating. You can make a bullish call here, right? And actually, yeah, this is not bad because it's a double bottom, it's a tweezer. So you can kind of see that we also have bullish MACD divergence, right? And we can make a bullish call. So at this point, we're not going to be looking at the higher time frames, and we're not going to be looking at the lower time frames. You're just using your skills to identify what the trend is doing, to identify support and resistance levels, trend lines, bottoms, price action patterns, falling wedges, head and shoulder patterns, all that good stuff, and making a prediction off of a single chart. Okay, and then we're going to collect that data, and I'll show you exactly what we're going to do with it. So here I'm going to make a long prediction. I see a double bottom. It's at the bottom of a trend. There's bullish MACD divergence. There's deceleration. There's a tweezer bottom. So all I'm going to do is I'm just going to put an arrow, and I'm going to predict that on this day, January 12, 2017, we're going to have a bullish move to the upside. And that was wrong. So if I've taken a trade here, I would have been stopped up. And it continued, I believe, a little bit lower. Let's see. Yeah, continued a little bit lower. So check this out. This was taken on January 12th. So what I would do now is go to my journal here. Pound CAD, prediction was long. Daily direction prediction was not correct, right? I predicted it long and it was short. We don't know this stuff yet. We don't know this yet. We don't know this yet. And open date would have been 12 Jan 2017. That's all that we're collecting now. Later, once we collect all the data for that whole year, then we're going to look at the higher time frames and the lower time frames and the actual strategy and the entry and all of that. So let me continue, and then I'll explain this a little bit more. Right, so if we continue, oops, went too fast. But this is now another prediction. So you see here it was a false breakdown, and right away it kind of popped to the upside with a bullish engulfing after this low test. So this would be another prediction for me that is going to go up. Simple. I'm just predicting the bullish move, right? And this one was correct. So price went up. This was on January 18th. So I do the same thing. I go pound CAD. This one was correct. 18 Jan 2017. And continue going. And you can see now it's starting to consolidate quite a bit. So there's no trade there for me. You can continue with your analysis. Notice that there's a little trend line there. Price action is holding. and still holding and just consolidating sideways. So there's nothing that I'm interested here. And actually, remember, I'm going to show you one thing, right? I'm going to do a simple calculation right now. Imagine from what I have done in the past, whenever I did this kind of process, what I'm going to recommend now you guys do is that you do this before I continue further, is that you do this for at least a month, looking at every single pair. So pick a year, so as an example, I just picked a random year, 2017, right? I'm just backtesting pound cat from 2017, right? But what you will be doing here, you'll be collecting on this spreadsheet, 2017 backtesting, you'll be collecting data on every single pair, starting at Aussie dollar and continuing everywhere all the way down to Kiwi yen, right? So looking at all 28 pairs, one pair a day, 1 year a day. So, 2017, you would start at Aussie dollar and do this step one by one day, making your predictions on Aussie dollar. The next day on Aussie CAD and Aussie Swiss and Aussie yen. And you're collecting this data and you're building out this spreadsheet. And at the end of it all, you're gonna have a journal that's like this with every single trade from 2017 that could have been taken, right? So do this if you already have data like me from 2015, 2016, 2017, 2018, then start at 2014 or 2013, right? If this is a new trading style and you've been trading for a long time, but this is a new trading style, then again, you can start at 2017. If you started in 2018, you can do your first year backtesting 2017, right? And the next month you can do 2016, and then the next month 2015, and keep on collecting data like that. Does that make sense? I hope that makes sense. And at the end of this all of it, you will have, at the end of the month, you will have a spreadsheet like this that's totally filled with every single potential position all the way from Aussie dollar down to Kiwi yen. You'll have hundreds of trades here. Now, what I have found through backtesting is that 5 trades per year is really what you want to be aiming for. So you probably will have more than 5 predictions, but you should be aiming somewhere between 5 to 10 predictions. Okay, maybe a little bit more, maybe a little bit less, but let me explain why. Anything over 10 on a given pair could be over trading. You could be maybe a little bit more picky, right? But let me show you. If you take 5 trades a year, there's 28 pairs here. Don't forget, 5 trades might seem like not a lot, but there's 28 pairs. So 5 times 28, that's 140 trades in a given year. That's a lot, 140 trades, that's a lot of trades. That averages at almost 3 trades a month. 3 trades a week. So that's exactly pretty much what I average. I average about 3 trades a week. So when you're doing this backtesting, the daily direction predictions, when you're doing this, making a prediction on the daily chart for a bullish day or a bearish day after really good rejections, right, you should have about 5 to 10 predictions, and then later you'll notice that some maybe are not entries because of the higher time frames or the lower time frames, but you're making the predictions here. So you should have anywhere between 5 and 10 kind of thing. Now, we said there's 140 trades, 3 trades a week. Think of this a little bit. If your strike rate's 60%, that's 84 wins, right? And 56 losses. So take 84 wins at 2% average reward risk ratio. That's 168%. So 84 trades, that's with a 60% strike rate. I hope you're following me. And that gives you 84 trades at 2% risk on average, just an average reward risk, 2%. Reward, not risk. So an average reward of 2% gives you 168%, right? And we had the losses were 56 losses. So 184 minus 56, that gives you 128% return, taking only 3 trades a week, right? So that's why you need to be very picky. You know, that's why you shouldn't be predicting every single day. That's why you shouldn't be trading every single day. You should only be looking for good rejections on good levels, good reversal candlestick formations before you say that this is going to go long or it's going to go short, right? Be picky on this daily time frame. Be really picky, you know, and then you should be aiming to end up somewhere around 3 trades a week, 4 trades a week on average. Okay, so that's just something to tell you that you shouldn't be really predicting every single day. Like I'm not here, you know, it's just consolidating sideways, so I'm definitely not predicting every single day. All right, let's speed it up. And you see now it's exploding, but there was no entry here. You know, it was just sideways consolidation, so I would never make a prediction there. Now we have a little bit of a pullback. Let's see what happens. Let's make this larger. And boom, here we have something. So we have a bounce of the 50 EMA. We probably have a fib retracement in here. All right, so I'm going to make this as a bullish prediction long right there. So that's a nice rejection. It's a bullish engulfing, bouncing off the 50 EMA. And I'm going to say that on April 12th, we're going to go up. Let's see first. And it went sideways, but overall up and exploded, right? So it didn't go down, it didn't break the lows, so chances are it probably would not have been stopped out, but we'll see that about that later. We see it then exploded. So overall direction prediction was correct. So this is long on April 12th. All right, and now we go back. So I'm gonna speed this up a little bit, and then I'll see you guys in a minute or two and keep on talking, but I'm gonna speed it up just so this doesn't take 2 hours. And that is it. So you guys see now that I went through every single day here and I made some predictions. I have quite a few. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So that's quite a bit. But I felt like there was, you know, decent amount of these pretty good predictions, you know, pretty good rejections here and there. Some maybe could have been avoided, but overall I see that there's been some nice candlestick formations, some nice rejections on pound cat in 2017, right? So you guys see I'm not predicting every single day. I'm not predicting when there's messy price action. I'm just using the skills that I showed you guys in the earlier lessons and combining them together to predict a bias in a specific direction. Not really a bias, but just to predict a specific direction, whether it's going to go short or it's going to go long after a rejection. Okay, because you got to understand that all the strategies, whether all the way from the ABO to the IBO, CBO, ACB, phase line break, they're all starting at the beginning of a run, the beginning of a daily run, right? So by being good at these predictions, you'll be able to always be good at predicting the beginning of the run. And if you can predict that the beginning of a run is starting, then you should be able to make money through the strategies, right? Because they're all all the strategies are at the beginning of the run, right? So this is very important. Remember, this isn't fine-tuned. We didn't look at the higher time frames yet. We didn't look at the lower time frames yet. So we don't even know what they're doing. And you can see that I went through all this data. I have 14. Should be a little bit less, but again, like I said, there's been some decent rejections. But you see now that I collected them and categorized them here. So now what I would do, so this would take maybe like 30 minutes, for you guys to do. It took me, I think, like 20 minutes to do. And if you do this daily, then you still have to fill it out. So now this is where really the time consuming part comes in. So do we have higher time frame confirmation? Do we have lower time frame confirmation? Was there a strategy? Yes, no, so I'll show you how to do this. So pound cat long, this was daily direction prediction was not correct. It was Gen 12, right? So it was this first one right there on the double bottom. So Gen 12, 2017, intraday charts, jump back. Actually higher time frames, and let's have a look. Gen 12, 2017. So it was right at the beginning here. And did we have anything? So Gen 2017, there it is, January 2017. And it looks like we're forming this low test reversal, forming this tweezer bottom on a monthly chart. So that's a yes. On the weekly time frame, it looks like we're also forming this double bottom and exploding to the upside right here. So weekly time frame, does it give us confirmation? Yes. Support on monthly and weekly, right? So just a brief note. So higher time frames are good, and a brief note. Now lower time frames. So this was January 12th, and we're going to jump back to see what we had there on the lower time frames. And it's just calculated on the 5-minute time. But you can already start to see here on the 4-hour and the 1-hour that we did not have anything on January 12th, right? So on January 12th, the 1-hour time frame was just holding this 1-hour 50 EMA, right? Same thing on 4-hour chart. It could have been like an advanced breakout, but we didn't have any serious candlestick formation or anything like this here on the bottom to actually trade the breakout. You can kind of see that the 4-hour 50 EMA is holding very well, or the 1-hour 50 EMA. So do we have lower time frame confirmation? No. So this would not have been a loss. It would not be a trade that we would have taken. $1-hour 50 EMA holding strong. Okay. Was there strategy? None. That's it. We don't have to do anything else for this prediction. There was simply no trade. Okay. And then you would go and do this for the next one, right? And the next one, and the next one, and the next one. And I would suggest that, well, let me actually do the next one for you guys. So the next one is 18 January 2017. So that would have been the second bullish prediction after the bullish engulfing now, right? January 18. And the higher time frames are the same. Monthly is the same, weekly is the same, double bottom, monthly tweezer forming, same thing. We'll just copy that. It's the same higher time frames. What about the lowers? So this was on the 18th of Jan. So if we move up here and we notice 18th of Jan, that's right here. What do we have now? Okay, this is interesting, right? So we have a CBO. Check it out. And all I'm doing here is I'm just looking, all you want is you want to know what's the best case scenario.
right? Because you want to know what's the best way to execute all of these trades. That's what you want to know. You want to know the best way to execute every single one of these predictions, right? So every single prediction that you made, what is the best way to execute it? Okay. Sometimes there's going to be nothing. Sometimes there's going to be a CBO, IBO, and then you do the best entry, whether it was a 5-minute or a live entry or an order, right? And then you put all the data. So let me show you here. So we can see that it never pulled back to the 1 hour 50 EMA and 0.382, but it did have a nice breakout. It did have a pullback. It did reject the 4 hour 50. So you see it did pull back to some support, which is the 4 hour 50. So the question is, this could have been an order simply because the higher time frames were great. So you could have had an order here, but let's simply because let's say we had an order at the 1 hour 50, so it would not have been triggered, right? Let's just say that. But I think it's good enough for the order. Then you would have probably entered on the volume spike here as it started to accelerate to the upside, started to break out. That probably would have been your entry. So how would the position size work? So again, stop loss, this is a CBO, right? So stop loss would be about 23 pips. Target, we don't know yet. So for target, what would be the best target based on your charts? So that's where you again look at the higher time frames and what's the best target here. So probably the daily 50 EMA. You can already see the daily 50, the general area started to stall. But you also know that the higher time frames are good, monthly tweezer, weekly double bottom, that a potential breakout could happen. So the way you approached it, how would you approach it? Would you hold the breakout? Would you place a target there? What would you do, right? So a target is a good idea, placing it at the daily 50, and then if it breaks out, you can enter again on the retest, right? Or you can place an alert and see what happens. It might break out, it might stall, and therefore you would take your profit, right? So what's the best case scenario in this case? Let's see. So that was a hit that's daily 50 EMA on the 23rd. So if we move forward a little bit on here, and to the 23rd, and this is kind of where we hit that daily 50 EMA, in this general area. So you can see that when it came to an exit, based on the management rules, the first exit would have been like right here on this breakdown, right? So that would have been the first potential exit. But obviously it doesn't give us the most ideal price, right? So that would be a reward of 1.3%. So that's all right. It never broke out, it broke down. If you had a target placed on the daily 50, right? Remember, you want to know the best case scenario. So the daily 50 target would have been 64.75 or 65.75. %, so nearly almost 2%. Okay, so that's your entry. Now take a screenshot of it and put it in a journal, right? Take a screenshot, put it in a journal, and then fill in all this data here. So let me just make it smaller. So did we have lower time frame confirmation? Yes, we did. Trend change. Strategy, CBO. Entry method, live. Close date, 23rd. Open price. And there we go. So 1.92% was made. And that's it. You take a screenshot and you put any notes. Be specific. So if there's notes to write down notes. I recommend putting down some kind of key note from every single position. So in this case, it could be daily 50 EMA was a great target on a pullback play, or a potential first breakout kind of thing. So be specific. Write some notes down, and then do this for every single every single trade that you have taken, every single prediction that you have taken. And you'll notice that some of them did not line up. Some of them, the daily direction prediction failed. There was maybe nothing on the higher time frames. Maybe there was a good prediction, but there was nothing on the higher time frames. Maybe nothing on the lower time frames. So no trade taken, And I would say always look at the best case scenario, because you want to know what the best case scenario is, how to execute the best case scenario. You always want to do your best, right? So when you're doing this, instead of wasting time going kind of candle by candle, doing your multi-time frame analysis, just do the daily chart, do your predictions, and then figure out, okay, did I have multi-time frame analysis? Was the monthly good? Was the weekly good? How about the intraday charts? Did they have a setup? Yes, no. Was there a strategy? Yes, no. If there was, what's the best execution? Pivot order, live entry, order at 0.32. What's the best management for that play, to get the biggest return kind of thing. And then you collect that data. You collect it, you make your notes. And then after every single day, so this would take 1 day, maybe a couple hours to do pound CAD, collect all the data. And I recommend, if there's a trade, take a screenshot of it and then put it in a journal like this, categorize it by year, so if you're doing 2016, and put it January, and mainly just categorize it by year and take all the screenshots, right? And then you'll know. And what I would recommend is that after every day, before you start the next pair, the following day, that you review your notes and try to improve if there's anything to improve. And I guarantee that if you do this for a month on every single pair, 1 pair a day, 1 year a day, make your predictions, look at the higher time frames, look at the lower time frames, look at multi-time frame analysis, do the line up. Was there a strategy? What's the best execution? If so, if there was a strategy, and if it failed, write it down. Write if there's anything that could have been improved. Maybe the higher time frames were not good. Maybe the higher time frames were rejecting the weekly 50 EMA. So you put that down. No, the higher time frames did not give me confirmation. Rejecting the weekly 50 EMA, trade failed. There was a trade and it failed. So then you can categorize all the trades that failed, the losses, and then look at, you would just kind of filter by losses, and then look at your notes. Why did they lose? Right? How easy is that? So imagine if you do this for every single pair for that given year, you would have 100 trades in here, potential trades, with notes on every single one. If they failed, you would write down there was no higher time frame confirmation. It was rejecting the weekly 50 EMA. The daily or the lower time frames did not have confirmation or whatnot. You would put down your notes. Maybe you would do final notes over here, overview of why you think it failed, what it could have been improved. And then you would look at all of them. If it was a good trade, then you would also look at all the notes and why was it good, right? And look at the screenshots too at the end of it all. So do this after every single day before you start the next backtesting session. Review the notes and get better every pair that you do. And imagine doing this for a whole month, every pair, 1 pair a day, 1 year a day, for a whole month. You would bang it all out and you would learn so much, and you'll be collecting data as well. And then if you want to go crazy, do it the next month for a different year, the previous year, 2016, same step. And then another month, 3 months in a row for 2015, same step, and imagine how much time you would put in. It would be a lot of time. It would be a lot of hours, right? It's a 3-month commitment here. You can do it till the end of the year, and into the new year. But you would learn a ton, and you would pretty much master trading. I think so. Remember, I did this and I did not have strategies, When I was doing this, I did not have strategies. That's just how I developed the strategy slowly, over time. by doing this kind of process. But you guys are doing it with the strategy, so it's easier for you guys. You guys already know how to execute, so you can just kind of look at the strategies and fine tune. I recommend maybe watching the strategy videos before you do this, just so to give you guys a refresher. But this is great. So this is it, guys. I'm gonna wrap it up here. I think I'm pushing roughly an hour, 45 minutes or so. So I think this should be worth it. And again, once you have it all, once you finish the year, go here and backtest your performance. So put all your percentage returns for that specific year. All you would do is, once you do it all, after, you would just filter by close date, so filter by close date, ascending, whatever, and you would have all the trades here in order, as if they were taken live. And then you would go and do your performance. So fill it in, fill in the strategy, strike rate, loss, and you would just keep this tally going for every single year, and then you would match it with your live performance. And this would just give you a lot of data. This is mainly what it's for. It's for collecting data, improving, getting better. And if you want to improve something, like doing this fine tuning, like this first step of backtesting is the fine tuning. If you want to fine tune something, the fine tuning would actually come after you've collected the data. Once you know how to trade, the fine tuning is once you've already learned how to trade, you have the strategies, you've already done this process. You don't have to do this process multiple times. I've only done this process once, really. After I've quit my job, I spent 3 months doing exactly this, literally every day for 3 months. And you'll learn so much that I've never done it again. You don't have to, but I've done it later for every single strategy kind of thing. When I was developing the strategy, then I've done a similar process, for every single strategy. And now it's all about just fine tuning. So now I just fine tune. If there's something in my head that I think a certain strategy can be better, I have all the data, right? So if you've only been trading for 1 year, maybe 2018, but you've backtested 3 years, then you have 4 years worth of data that you can also do fine tuning on. Remember that, this is the beauty of doing this type of backtesting with predictions and trades and collecting those screenshots and collecting that data, is because if you were only trading for 1 year, but you do this, then you have 4 years worth of data. So if there's any fine tuning that you can do, you have enough data to do that fine tuning. That's it, guys. I hope this was helpful. And something like this, I think it's a waste of time doing one by one. It will take you hours and hours and hours and hours. Do it literally one candle at a time. Doing multi-time frame analysis, it will take you forever. Same thing with intraday charts. If you were going to do this one candle at a time to figure out the live entry, you don't have to. I don't think you have to do that. It's very time consuming, and I don't think you're going to get as much out of it as if you were doing this. Do this, you will get more out of it. And again, figure out what the best entry is, the best execution, the best management, because that's what you want to focus on. You want to focus on what is the best way to take this trade, right? And the data is in front of you, the chart's in front of you. So just figure it out. What do you think is the best execution here, the best management, and focus on that. You want to know the best all the time, okay? And then when it's time to execute in the real world, you know what the proper execution should be, because you've done it over and over and over and over again. That's it, guys. Hope you enjoyed it, and I'll chat to you guys in the next lesson.
So that is the end of the journaling and backtesting lesson. Again, that was the lesson from MasterClass 1.0. Hope you enjoyed it. It was one of our members' favorite lesson from the initial MasterClass 1.0 course. And like I said, in the first quarter of 2020, there's going to be a whole new journaling and backtesting season with multiple lessons, breaking down everything very simply within small little chunks. But I'm just waiting for this really cool journaling and backtesting software to be released, because it will literally change the journaling and backtesting game. So I'm just waiting for that to drop. And then once that is released, I will be recording a brand new season with multiple lessons. So for now, I hope you enjoyed this, and I will see you in the next lesson. Take care.